Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, August 10th, and wow, we've been having such a roller coaster since that Fed statement yesterday. It's been insane. Uh, so let's go ahead and jump into the economic news, and I'll be quite frank. The economic news today is really nothing special to write home about. It's nothing that's going to bear really any importance in today's pricing for bond or the equities market. So basically what that means is basically it's going to be headline news, and we'll get into that here in just a moment. But I'll just go ahead and briefly go over it. We had job openings of about estimated at the last one was at about 3.03 million, and came in at 3.11 million. So job openings did improve slightly, about 100,000. Wholesale inventories, it was at 1.7 the previous month, and basically it decreased down to about 0.6%. And then federal budget will be coming out later today, about 11 o'clock West Coast time, and it was at negative 165 billion. I'm kind of not enthused about watching that after we've been talking about this debt ceiling crisis. So I can only imagine that's going to be astronomical blowout there. So let's go ahead and take a quick peek here at the headline news. And stock market's way down today. It was kind of insane. So here's how it kind of played out yesterday. After the Fed made their statement yesterday, it looked like it was kind of favorable, but it would start dropping all the way down to almost negative 200, and then it made a swing back all the way up, closing above 400. So a 600-point swing in the stock market. Bond market, I just kept getting all these alerts, improvement at about 11:30, and we had about 113 basis point improvement. So it's been huge. And then we start today off, and the stock market is way down again today. It was about 400 this morning. Right now, last time I saw it was in the low threes, down negative on the Dow, and I'll show you in a bit the bond market. So again, big roller coaster ride that's going on. So basically, what that means is a lot of emotion. How long this emotion plays out, anybody's guess right now. So let's kind of see a little bit more of the headline news. Part of it is a big one right now is the concerns of the euro debt crisis escalating. A lot of investors are basically telling Europe you need to come up with a more definitive plan because there's a lot more concerns going on with their debt crisis right now that's going on. They're basically saying, the central bank either got to do more or maybe allow the countries to go back to their respective currencies from before because right now it's not, the euro in turn has also been declining in its value. So, and they're still kind of looking at ways on how to work its way through how it's going to play out. So, debt crisis in euro is a big concern right now for the investors. Rumors of France becoming the next downgrade. So there's a lot of talk that maybe France's credit rating might be downgraded as well. As we mentioned, just the euro is weakening. U.S. Treasuries have been climbing, so we're like at 2-year highs on the Treasuries. So that's real big right now. A lot. So basically, what people are doing is they're putting money into the Treasuries and as well as mortgage-backed securities as a flight to safety. Gold actually jumped up dramatically. It's up to about 1,800 right now. Just seemed like yesterday it was at 1,600, and before that, I don't know. It seems like it didn't seem that long ago. It was even 600. So basically, gold's really a big hedge against inflation. So I'm sure a lot of people are predicting huge inflation sometime in the near future. So, and I wouldn't blame them. So let's go ahead and take a look at something else I don't hear anyone talking about, but I just noticed that oil dropped all the way down to about $80 a barrel. That's huge. I mean, it was just recently, like maybe even it was last week, about $90 a barrel, or even 96. So looking forward to some better prices at the pumps. I don't know about you, but I'm tired of paying out. Seeing a lot of these commercials or jokes about price basically paying arm and leg and stuff like that for oil or gas. So that's gonna be huge. After the Fed meeting, there was also talk about more quantitative easing. They didn't really discuss it, but a lot of people are figuring there's got to be probably something new in this new quantitative easing in the near future. They basically said they have new things some new tools to kind of work on that could try to jumpstart the economy. So One of my buddies, Dan Rowich, is kind of predicting there might be something with these low rates because the Fed also stated yesterday, which we think it might be the first time. We haven't seen any records of it, but this may be the first time where they actually specifically stated that rates going to remain at low period for all the way to 2013. So never have we ever heard them. Three dissenters basically said they wanted to see extended period, but not actually specifically saying mid 2013. So that's pretty much clairvoyant or clarification of what they have intention, because the economy is slowing down much more rapidly than they anticipated. So but go back to what my buddy Dan Rowitz is predicting. He's thinking that they make loan home mortgage with the low rates out there, that maybe they throw in something in there to allow the American people to take more advantage of it, especially since a lot of people are underwater, to do more type of streamlined type of refinances for people to go ahead and lock in on these low interest rates. So that could be a possibility. I mean, we really need something, at least on the housing side, the real estate side of things. That's what kind of boosted the economy up in the early 2000s. Was real estate, and right now it's probably what's hindering the economy right now. So if we can get a boost on the real estate side, it could help out a lot of things. So let's go ahead and take a look at the bond market and see where interest rates are going. As you saw, we had this huge rally, it was 113 basis points. And then on top of it, we had a huge rally going on today. We were almost at 105. We were up at 105.96 this morning. And it's pulled back a little bit, as we see here, as with this, basically this is a wick of the candlestick here. But right now, interest rates dramatically improved. And I'm going to show you on the next slide here where we were last year compared to this year. Here's last year's high. We were just about at 104. We were about like 104.85 or 103.85. Last year was our height. So we saw how low those rates were. And now we're actually up to, we almost touched at 105. We're almost 100 basis points better than what we were last year. So this is huge right here. And as you can see, that little thing that keep popping up, that's going to be going up and down. So again, we're getting way up here, and it's coming down here, and it's going back and forth. So I've had a couple of those already this morning. But this is where it's kind of playing out. So right now we're right about just here under 104, about here under 104.50 right now, and rates are phenomenal. If you guys haven't refinanced yet or are looking to refinance, right now is the time to get in, because again, we don't know how long this emotion is going to play out. We don't know, and then. So go ahead and jump in there if you're looking to buy a home or looking to refinance. I could keep talking on more and more about all the excitement that's going on right now, but stop by California Mortgage Tips, contact me. I'd love to be able to talk to you further. You guys have a great day.